quite a ride this weekend, thanks to USDC and thanks to Silicon Valley Bank. So what really happened is that we have USDC DEPEC. As you can see on CoinMarketCap, basically USDC went from $1 to 0.88 dollar or 88 cents, and on some exchanges, like some smaller exchanges, actually it got as low as 18 cents. And the reason for that was that USDC has some of its funds in Silicon Valley Bank, and Silicon Valley Bank actually got crashed on Friday. There were some peculiar news coming along the way, and the whole weekend was super stressful for all the depositors inside the bank. And in this video I'm going to cover a little bit of the story because it's a non-story right now. The contagion was contained during the weekend thanks to the quick action by US regulators, but it's still worth going through the story because it shows how in uncertain times we live and how nothing is safe really. So even if you think about your stable coins, you might think again how stable they are. So let's get back to the story itself. There's this awesome thread by Brian O'Connor, basically summarizing everything that happened with Silicon Valley Bank and how it happened so quickly. So basically the quick stats were with SVB, 190 billion in deposits. So this is a medium-sized bank. It's not super large, but it's not super small as well. But the notable thing here is that it works with many VC-funded startups, especially in the Silicon Valley. This is what the focus and specialization of this bank is. So it really touched upon many startups that were funded by VCs from Silicon Valley. So because of that, it was really important for the tech economy. So the bank itself bought some mortgage-backed securities, and this is how they lost most of their monies. And that wasn't enough. They did fractionalized banking like most of the banks, so they didn't have enough cash once the customers trying to get their deposits out, and this is how the fall really happened. So looking at the finances last year, they were pretty good as far as the experts say, and they wanted to cover for the long term. They wanted to have some kind of papers as well as the liquid cash, so they bought this mortgage-backed securities. That worked in 2021, but once the government started raising the rates with the crisis of 2022, the prices started to fall, and this was really something that touched upon mortgage-based securities that they have bought because they were risky, low return, and on the other hand, US government bonds that appeared in the same time were zero risk and 2.5 return of SVB. So that's why the SVB mortgage-backed securities. So that's why the whole thing started to fall. And to keep the bank alive and have this $80 billion somewhat, he decides to build a safety net cash. So he decides to share some of those things, and he basically does two moves: sell some of the portfolio and sell some shares of SVB of the bank itself as well. So that wouldn't be a big deal, but there was a problem here that Silvergate Bank, which was part of SVB, actually failed. And Silvergate failed before that because of FTX. So FTX crash caused customers to pull $8 billion from Silvergate, which was banking. So Silvergate was banking FTX. And because of that, on March 8th, Silvergate closes its doors. But the same day, SVB announces its safety net. So basically, the CEO is proud of the announcement. Really, the PR team here announces the offering of how they restructure it. So nothing really wrong about it, but they chose the timing really badly, and that really caused the panic. So after FTX collapsed and people were really scared about a lot of things and are still scared because that was just last week. So thanks to all those events happening and Silvergate, economic recession fear, and the different layoffs in tech, basically customers started to pull out the cash out of SVB. And this really turned into the classic bank run. So with those rush to pull the cash, this really sends the bank into a tailspin, and they lose $80 billion overnight. This is the valuation of the bank going down. So this is in the free fall, and this basically what happened over the past week. And basically during the weekend, the government itself decides to make the depositors whole and take control over the SVB to some extent, so that everyone can have access to the cash. So all in all, the crisis is right now a little bit better. So it seems like that people will get their money back, and as you can see from the graph of USDC, it got back. But it's really interesting here because actually, even if Circle, so the team behind USDC, the company behind USDC, would not access SVB cash, it was only a small percentage of the whole cash, because they had like $3.3 billion out of $40 billion at SVB. They have multiple banks as well, but nevertheless, the FAT was really profound here, and there were so many doubt and uncertainty. So you can see really at this example how much of a narrative really make people behave, and really live in these tumultuous times where, thanks to social media and thanks to how fast information spread, you can have events like that overnight. So we had this intervention by the US government. So the situation is safe for now, but you never know with other banks, you never know with other stable coins as well, and you really have to be careful right now. So looking at Twitter and looking at different commentaries, this might point you to different directions. So for example, Arthur Hayes, he actually points that this might actually cause a little bit of the bull run in the crypto ecosystem, because people will try to have assets on chain and have crypto that do not depend really on the government, so Ethereum, Bitcoin, and similar ones. But also you can think about this being a bearish scenario, because people will be scared about risky assets, and crypto is definitely a risky asset, so that's more of a bearish scenario. But in the end, we don't know anything, but as always, there's a lot of things happening, and definitely crypto is not for the faint-hearted, as you can see, especially with the fall of 10% in the pack of USDC overnight during the weekend. So what's really the conclusion here? The conclusion is that you really need to have long-term thesis, and you really need to think about crypto as something that can be super volatile in the short period of times. So leverage is not really fine here unless you want to monitor your position 24/7. But if you want to sleep peacefully, then basically on the major coins and for the long period of time, set and forget, DCA in, DCA out. That's the best scenario. For everything else, subscribe to the channel for more crypto news, crypto updates, new blockchains, new chains, new DeFi protocols, new NFT collections, and everything else. Subscribe and see you in the next video.